Before we begin, a quick and important disclaimer. This video is for informational and educational purposes only. I am not a financial advisor, and the content presented here should not be construed as financial, investment, or career advice. The decision to pursue an MBA is a significant personal and financial one. You should always conduct your own thorough research and consult with qualified professionals before making any decisions. All figures and examples used are illustrative and not guarantees of future outcomes. You're at your desk. It's 3 p.m. on a Tuesday, and you're staring at a project plan that feels like it was written in a foreign language by someone who hates you. You're good at your job. You hit your targets, you get positive reviews, you're a solid performer. But you've hit a ceiling. It's not made of glass. It feels like it's made of concrete. You look up the chain of command at the directors, the VPs, the people who seem to move with a different kind of confidence, who speak a different language of strategy and finance, and you have that nagging, persistent thought. How do I get there? For generations, the answer, the almost mythical cheat code for ambitious professionals, was the MBA. The Master of Business Administration. It was the golden ticket. The 2-year crucible that transformed a mid-level manager into a C-suite contender. But that was then. This is 2026. And the whispers have turned into a roar. The MBA is a scam. $250,000 for a piece of paper? You can learn all that on YouTube for free. My friend went to a top school and got laid off 6 months later. And you know what? Those critics aren't entirely wrong. The sticker shock is real. The debt is terrifying. The risk, in a world of AI disruption and economic uncertainty, has never felt higher. It's enough to make anyone slam the door on the idea and just try to grind it out for another 10 years. But what if that's exactly what they want you to think? What if the common criticisms, the scary headlines, are missing the most important part of the equation? What if the true value of a top US MBA in 2026 isn't what it used to be, but has evolved into something even more powerful, more resilient, and more critical for long-term success than ever before? Over the course of this presentation, we are going to dismantle the myths and give you a brutally honest, data-driven framework to decide if this massive investment is the single best bet you can make on yourself. We're not just going to talk about salaries, we're going to break down the hidden curriculum, the power of a curated network, and the specific skills that make graduates not just employable, but indispensable, even when the economy gets rough. By the end, you won't have a simple yes or no. You'll have a new lens through which to see your own career trajectory, and the tools to make this monumental decision with absolute clarity and confidence. So let's start with the biggest, ugliest monster in the room, the money. Because let's be blunt, nothing else matters if the math doesn't work. The average all-in cost for a top 22-year, full-time MBA program in the United States, when you factor in tuition, fees, health insurance, and foregone salary for 2 years, can easily push past $300,000. Let that number sink in. $300,000. That's a mortgage in a huge part of the country. It's an astronomical sum of money that feels, on its face, completely insane. Why would anyone do this? The answer starts with a simple, powerful concept: the immediate inflection point. We're not talking about a gradual raise. We're talking about a fundamental reset of your earning potential. The Graduate Management Admission Council consistently reports that the median starting salary for graduates of top-tier US MBA programs is more than double their pre-MBA salary. Think about that. Let's say you're a marketing manager making $85,000 a year. A solid, respectable income. You go to a top program, and you walk out into a consulting or tech product manager role with a starting base salary of $175,000. That's not a 10% bump. That is a life-altering financial leap from day one. And that's just the base salary. We haven't even talked about the part of the compensation package that the online critics conveniently forget: the signing bonus. For high-demand fields like consulting and investment banking, signing bonuses of $30,000, $40,000, even $50,000 are standard. That bonus alone can wipe out a significant chunk of your first year's living expenses, or make a huge initial dent in your student loans. So, when you look at that terrifying $300,000 cost, you have to immediately subtract a massive immediate pay increase and a substantial cash bonus right at the start. This brings us to the payback period. This is the single most important calculation you can make. How long does it take for the increase in your salary to cover the entire cost of the degree? Let's run a simplified, conservative example. Let's use our marketing manager, we'll call her Jessica. Pre-MBA, she's making $85,000. Post-MBA, She lands a job with a $175,000 base salary. That's a $90,000 per year increase in gross income. The total investment, including 2 years of lost salary, was, let's say, $350,000. If we just look at that raw salary jump, she's earning an extra $90,000 a year. Without factoring in taxes, raises, or bonuses, she breaks even on her investment in just under 4 years. 4 years. From the day you graduate, you're 4 years away from having the entire massive cost of your degree paid for by the salary differential it created. Find me another investment in stocks, in real estate, in crypto that has a payback period that reliable and that fast. But here's the secret. The real power isn't in that first job. The first job just pays for the ticket. The real value is what happens next. The MBA isn't a one-time salary bump. It's a career accelerator. It fundamentally changes your trajectory. The person without the MBA might get a 3 to 5% cost of living raise each year, with a 10 to 15% bump when they switch jobs every few years. The MBA graduate, however, is now on a completely different track. They are on the partner track, the director track, the executive track. Their promotions come faster. The scope of their responsibility grows exponentially. Their year-end bonuses are calculated on a much larger base and are often a much larger percentage of that base. So while Jessica's colleague who didn't go to business school might go from $85,000 to $120,000 over the next 5 years, Jessica is going from $175,000 to $250,000, plus a performance bonus that could be another $100,000 on top of that. By the time they are 10 years out, the gap isn't just a gap. It's a chasm. The non-MBA is a senior manager making a respectable $150,000. The MBA grad is a director or a new VP clearing $400,000 a year. This isn't a fantasy. This is the documented statistical reality for graduates of top US programs. You are not just buying a new job. You are buying a new career path. A path with a much steeper upward slope. The financial return doesn't stop after the 4-year payback period. That's just when it starts to compound year after year, for the next 30 years of your working life. The numbers become staggering. That's how you get to that statistic of a $3 million lifetime earnings gap. It's not magic, it's math. It's the power of a higher starting point combined with a faster rate of growth over a long period of time. But even this powerful, compelling financial argument is only the most basic surface-level reason why a US MBA is still such a potent investment. Because if it were just about the money, there might be other, riskier ways to get there. The true, durable value lies in the assets you acquire that don't show up on a spreadsheet. It's what makes you resilient when the economy turns sour, what gives you options when your industry gets disrupted, and what allows you to pivot and reinvent yourself a decade down the line. It's about becoming recession-proof. And that value is built on 2 core pillars that you simply cannot replicate from a YouTube video or an online course. The first is what I call the human API, the application programming interface. In tech, an API is what allows 2 different pieces of software to talk to each other seamlessly. In life, your MBA network is your human API. It's the protocol that lets you plug directly into opportunity, bypassing the corporate firewall of HR departments, online application portals, and faceless recruiters. And it operates on a currency that is more valuable than money: trust. Let me paint you a picture. Meet Jessica. 5 years out of a top 15 MBA program, she's a brand director at a major consumer goods company. She's doing great. Then one Tuesday morning, the news breaks. Her company is being acquired by a massive private equity firm. Her entire division, deemed redundant, is being eliminated in 60 days. Suddenly, Jessica and 200 of her talented colleagues are all hitting the job market at the same time, in the same city for the same roles. Her polished resume is now just one piece of paper in a blizzard of identical-looking pieces of paper. The old way, she'd spend weeks updating her LinkedIn, tweaking her resume, and blindly applying to jobs online, hoping an algorithm flags the right keywords. She'd be playing a numbers game, a low-probability lottery. But Jessica doesn't do that. Instead, she opens a WhatsApp group chat. The name of the group is HBS Section C War Dogs. It's her section from business school. She types a simple message. Hey everyone. Rough day. My whole division at P&G just got cut. I'm officially on the market. Looking for senior marketing or strategy roles in tech or CPG. Any leads or intros would be a lifesaver. Before she's even finished her coffee, the replies start rolling in. And they aren't just, "Oh no, sorry to hear that." They are tactical. They are actionable. The first reply is from David, who's now a VP of Product at Salesforce. Jess, that's brutal. Timing is wild. We are about to post a Director of Product Marketing role for our new AI cloud. It's not public yet. I sat next to you in strategy class for a year. I know how you think. You'd be perfect. Can you talk to the hiring manager tomorrow? I'll text her right now. Boom. One interview. A role that doesn't even exist to the public, with a direct, warm introduction to the decision maker. The second reply is from Maria, who ignored the corporate track and founded a direct-to-consumer sustainable home goods company that's now valued at $100 million. Jess, I am so sorry. Forget the big companies. Come work with us. We need a head of growth. It would be a stretch, but I saw how you led our team in that disastrous supply chain simulation. You stay calm under pressure. I trust your judgment implicitly. Let's have dinner tonight. Boom. A second interview. A leadership role at a high-growth startup. Offered based on a shared memory of competence under fire. A third message comes in, a private one from Ben, who went into venture capital. Hey Jess. Awful news. Listen, one of my portfolio companies, a health tech firm, is looking for their first ever chief marketing officer. The founder is brilliant but incredibly demanding. He's already rejected 20 candidates. But I know what he's looking for and I know your background. Let me prep you on exactly how to frame your experience. I can get you a meeting for Friday. Within 1 hour, Jessica has gone from unemployed to having 3 high-level, pre-vetted, champion-supported interviews. She bypassed the entire soul-crushing, time-consuming application process. Why? Because her MBA wasn't just a degree. It was a 2-year high-stakes audition. Her classmates weren't just contacts. They were collaborators who had seen her work, seen her lead, and seen her solve problems in real time. That shared experience created a foundation of trust. David, Maria, and Ben weren't just recommending a resume. They were recommending Jessica. They were putting their own reputation on the line for her because they had the data to back it up. That is the human API. It's an insurance policy that never expires. That brings us to the second pillar, which is the very forge where that trust is created, the crucible. This is the part everyone gets wrong. They think business school is about learning finance formulas or marketing frameworks. That's like saying astronaut training is about learning how to use a wrench. The content is just the context. The real product of an elite MBA program is the radical upgrade to your mental operating system. It's about fundamentally rewiring how you think. And the tool they use for this rewiring is the case method. Imagine this. It's 10 p.m. on a Wednesday. You're not watching Netflix. You're sitting with your study group of 5 people. An ex-Navy SEAL, a former chemical engineer, a classically trained pianist who ran an arts nonprofit, and a Wall Street analyst. In front of you is a 30-page document about a Brazilian mining company in 2002 facing a potential union strike, a currency crisis, and a new aggressive competitor. You have conflicting data, ambiguous reports, and by 8 a.m. tomorrow you need to have a bulletproof recommendation for the CEO. The engineer immediately dives into the operational inefficiencies. The analyst starts building a complex financial model to stress test the balance sheet. The pianist is talking about the corporate culture and the optics of the CEO's last statement. The Navy SEAL is focused on risk mitigation and contingency planning. And you have to absorb all of it. You have to argue, debate, defend your position, and ultimately synthesize these radically different viewpoints into one coherent strategy. It's messy. It's exhausting. It's intellectual combat. Then, the next morning, you walk into a tiered classroom with 90 other people who have gone through the exact same struggle. The professor, a world-class expert who has probably consulted for the very company you just studied, doesn't lecture. He starts with a single terrifying question. Ms. Chun, walk us through your analysis. What should the CEO do and why? For the next 80 minutes, you are in the crucible. Your ideas are stress-tested in real time. Your assumptions are challenged by brilliant peers. Your logic is picked apart. You're forced to think on your feet, to articulate complexity with simplicity, and to persuade a room full of skeptics. There is no right answer to find in the back of the book. There is only the quality of your thinking. Now multiply that experience by 500. 500 cases over 2 years. From a 19th century whaling ship captain deciding whether to risk one more season at sea, to a Silicon Valley founder deciding whether to pivot his entire company, something profound happens to your brain. You start to develop an incredible level of pattern recognition. You learn to diagnose the root cause of a problem, not just the symptoms. You learn to make high-stakes decisions with incomplete information, which is the definition of leadership. You become fluent in the languages of every business function: finance, operations, marketing, strategy, and more importantly, you learn how they all connect. You stop thinking like an employee in a department and start thinking like a CEO. This isn't learning what to think. It's learning how to think. It's an intense, structured, and repeatable process for deconstructing complex, ambiguous problems and building logical, defensible solutions. It's a mental framework that becomes part of you, a tool you use for the rest of your career, whether you're negotiating a multi-million-dollar deal, launching a new product, or navigating a corporate restructuring. These two pillars, the human API and the crucible, are inextricably linked. The intense, shared struggle of the crucible is what forges the bonds of trust for the network. You build that human API because you've been in the intellectual trenches together. This is the irreplaceable core of the elite American MBA. It's a unique combination of a high-trust community and a transformative intellectual experience. But let's be brutally honest. This transformation comes with a staggering, almost absurd price tag. We're talking tuition, fees, and lost salary that can easily top $250,000. So the real question, the one that keeps smart, ambitious people up at night, is this: how could that number possibly make sense in 2026? Is the return on investment real? Or is it the most sophisticated marketing trick in the history of higher education? Let's be brutally honest. For many people, the answer is yes. Feels like a trick. It feels like you're paying $250,000 for 3 letters to put after your name. You're buying a brand, a luxury good like a designer watch that tells the same time as a cheap one, but signals something entirely different. And the schools themselves? They lean into this. They market the prestige, the history, the Gothic architecture, and the photos of smiling alumni ringing the opening bell at the New York Stock Exchange. They sell a dream. And when the price tag is that high, skepticism isn't just healthy. It's a survival mechanism. But what if the brand, the prestige, is just a byproduct of something much deeper? What if the real product isn't the diploma, but the person you become in order to earn it? To understand the real return on investment, we have to stop looking at the MBA as a purchase and start looking at it as a process, a crucible, a fundamental rewiring of the way your brain operates. Let's talk about a person we'll call Alex. Before business school, Alex was a rockstar software engineer at a major tech company, brilliant coder, consistently top-rated performer. Alex could solve any technical problem you threw at him, but Alex was frustrated. He was stuck. He would see major strategic decisions being made by leadership, decisions that, from his perspective, made no technical sense. He'd propose elegant, efficient solutions in meetings, only to be met with blank stares and vague pushback about market dynamics or capital allocation. He spoke the language of code and logic, but the executives in the boardroom were speaking a completely different language, the language of finance, of strategy, of operations. He was a master of his craft, but he was playing on a tiny corner of the chessboard, unable to even see the rest of the game. He had hit a ceiling, not of his intelligence or his work ethic, but of his perspective. That feeling, that gnawing sense that there are invisible forces shaping your career that you don't understand, is what drives thousands of people like Alex to apply to business school every single year. They aren't just chasing a salary, they're chasing understanding. They're chasing a seat at the table where the real game is played. So Alex takes the plunge. He gets into a top program, takes on a mountain of debt, and walks onto campus. And on day 1, he gets a rude awakening. He discovers that the MBA program isn't about sitting in lectures and memorizing formulas from a textbook. The core of the curriculum, especially at elite US schools, is something called the case method. And it is brutal. Imagine this. You're handed a 30-page document about a real company facing a real crisis. A struggling airline in the 90s, a tech company deciding whether to launch a risky new product. You get all the data, the balance sheets, the market research, the internal memos, but it's messy, incomplete, and often contradictory. There is no right answer. Your job is to read it, analyze it, and come to class the next day prepared to defend your decision. What would you do if you were the CEO? And you're not in a classroom with other software engineers. You're in a room with 90 other brilliant, ambitious people. The person to your left is a former Navy SEAL who ran logistics in Afghanistan. The person to your right managed a multi-million-dollar brand portfolio for a consumer goods giant. In front of you is a private equity associate who has spent the last 5 years deconstructing financial models for a living. The professor doesn't lecture. They cold call you. Alex, you're the CEO. The board is waiting. What's the plan? And for the next 80 minutes, you are intellectually ripped to shreds. The finance expert questions your cash flow projections. The marketing guru challenges your go-to-market strategy. The military veteran points out the operational flaws in your supply chain. Every single assumption you made is stress-tested in a high-stakes public forum. It's terrifying. It's humbling. And it's the single most effective way to break down your narrow, specialized way of thinking. Alex, the engineer who thought in terms of clean, logical code, is now forced to think about stakeholder management, brand perception, debt covenants, and a dozen other variables he'd never considered. He's not just learning finance or marketing. He's learning how they connect. He's learning to see the entire chessboard. This happens every single day for 2 years. It's a flight simulator for business leadership. You crash and burn 100 times in the classroom so you don't crash and burn in the real world. The second piece of this rewiring process is the forced collaboration. Group projects are relentless. And the schools design the study groups with almost Machiavellian precision. They will take Alex, the introverted engineer, and put him in a group with a hyper-extroverted sales director, a quiet data scientist, a consultant who speaks in impenetrable jargon, and an artist trying to learn how to run a creative agency. Their job is to build a comprehensive business plan for a new venture, and their grade depends on it. The initial meetings are a disaster. They're speaking different languages. They have different frameworks for problem solving. But over time, through sheer necessity, they learn to translate. Alex learns how to explain a complex technical feature in terms of its market value to the salesperson. The salesperson, in turn, learns how to temper her optimistic projections with the realistic production timelines from Alex. They learn to argue, to compromise, and to synthesize their wildly different perspectives into a single coherent strategy. This is the hidden curriculum of a top MBA. You are fundamentally reprogrammed from a specialist into a generalist. You learn to speak the language of every single corporate function. You walk out of that 2-year crucible not just as an engineer, but as someone who can have an intelligent, data-driven conversation with the chief financial officer about funding, the chief marketing officer about positioning, and the chief operating officer about scaling. This is the alchemy. This is why the ROI is so astronomical. Companies are not paying a $100,000 premium for a piece of paper. They are paying for a leader who has been trained to think holistically. They are paying for someone who can step out of their narrow silo and solve complex, cross-functional problems that create immense value. They are paying for a translator who can align the entire organization around a single strategic goal. The salary isn't a reward for getting an MBA. It's an investment in a newly forged capability to generate much more value for the company. The diploma is just the receipt for the transformation you endured. But this rewiring, this new way of thinking, is only one half of the equation. Because all the new knowledge in the world is useless if it's not put into the right context, connected to the right opportunities. And that's where the second, and perhaps even more controversial, pillar of the MBA's value comes into play: the network. Is it just an old boys club? Or is it the most powerful career accelerator ever created? Let's be brutally honest. For decades, the MBA network carried the stench of elitism. A private, wood-paneled room where deals were made, hands were shaken, and careers were forged based on who you knew, not what you knew. And if you weren't part of the club, good luck. That perception isn't entirely wrong. It's just outdated. The network of 2026 isn't your grandfather's country club. It's a decentralized, global, digital superconnector. And understanding how to leverage it is the difference between a career that moves on a linear path and one that launches into a parabolic arc. To see what I mean, let's talk about someone we'll call Maria. Before her MBA, Maria was a brilliant software engineer at a mid-tier tech company in Austin. She was good, really good, but her dream wasn't to write code for the rest of her life. She was fascinated by the other side of the table, venture capital. She wanted to be the one identifying the next big thing, funding visionary founders, and shaping the future of technology. So she did what any smart, ambitious person would do. She polished her resume. She wrote passionate cover letters. She cold-emailed partners at VC firms she admired. And for 6 months, all she heard back was crickets. Absolute silence. The world of venture capital is notoriously insular. It's a fortress, and her emails were just bouncing off the stone walls. She had the intelligence, the drive, the technical expertise, but she didn't have the key. Fast forward 18 months. Maria is graduating from a top 10 business school. Nothing about her core intelligence has changed, but everything about her access has. In her first semester, she joined the Venture Capital Club. Within a week, she was on a career trek to Silicon Valley, not as a tourist, but as a guest, walking the halls of Sequoia Capital and Andreessen Horowitz. The people leading the tour weren't professors. They were second-year students who had just finished internships at those very firms. One of them, a guy named Ben, saw Maria's passion. He didn't just give her advice. He forwarded her resume directly to his former boss with a subject line that read, "Rockstar first year you need to meet." That one email, that warm introduction, did more than 6 months of her own cold outreach. It got her a first-round interview for a summer internship. But the network was just getting started. For a class project, she was paired with a team to analyze a startup. One of her teammates, it turned out, had a cousin who was a principal at a competing VC firm. Through that connection, Maria got an off-the-record coffee chat, giving her invaluable intel on what firms were really looking for. Later that year, at an alumni mixer in San Francisco, she found herself talking to a partner from a legendary firm. It wasn't an interview. It was just a conversation about a new AI trend. They talked for 10 minutes. She didn't ask for a job. She just made a connection. When full-time recruiting kicked into high gear, Maria wasn't just another resume in a pile of thousands. She was a known quantity. The warm intro from Ben got her in the door. The intel from her classmate's cousin helped her ace the case study. And when the hiring committee met to make their final decision, the partner she'd met at the mixer said, "Oh, Maria? I remember her. She's sharp. Let's bring her in." She landed a job that just 2 years earlier was a complete fantasy. This wasn't luck. It was manufactured serendipity, engineered by the most powerful feature of the MBA program, the network. You see, the network isn't just a list of names in an alumni directory. It's a living, breathing ecosystem built on a foundation of shared experience and mutual obligation. Every top business school has an alumni database that is essentially a private, hyper-powered LinkedIn. You can filter by company, industry, location, and function. Want to talk to a Kellogg grad who is a product manager at Google in their London office? You can find them in about 30 seconds. But here's the crucial difference. When you email that person, you're not a stranger. You're family. You start the email with, "As a fellow Kellogg student," and the response rate skyrockets. Why? Because that alum was once you. They used the same network to get where they are. And there's a deeply ingrained pay-it-forward culture. They know that helping you strengthens the brand, enhances the value of their own degree, and fulfills an unspoken promise they made the day they enrolled. This power doesn't expire upon graduation. It compounds. Let's imagine another graduate. We'll call him David. David works in consulting for 5 years after his MBA, then decides to launch his own CPG startup. He has a great idea for a healthy snack brand, but he needs capital. Where does he turn? His first calls are to his business school classmates who went into venture capital and private equity. They take his call. They listen to his pitch. They give him honest, unfiltered feedback because they have a shared history. One of them doesn't invest but says, "You know, you should really talk to my old roommate. She's an angel investor who loves this space." Another warm intro. A door opens. He secures his seed funding. Now he needs to hire a head of marketing. He could post on LinkedIn and sift through 1,000 unqualified applicants. Or he can post on the private MBA alumni job board. The dozen or so resumes he gets are all from highly vetted, incredibly smart people who speak the same business language he does. He makes a hire in 2 weeks. His company starts to grow, and he needs to figure out his supply chain. He remembers a guy from his study group who now runs logistics for a Fortune 500 company. He shoots him a text. An hour later, they're on the phone, and David is getting a $1 million masterclass in logistics for free. From funding to hiring to strategy to finding his first customers, the network is the invisible scaffolding that allows him to build his company faster and more securely than he ever could alone. Now let's go back to that old boys club idea. The biggest shift in the last decade is that the club isn't just for old boys anymore. Top US business schools have made a monumental and frankly long overdue push for diversity. Today's MBA classes are approaching gender parity and are more racially, geographically, and professionally diverse than at any point in history. This hasn't diluted the network. It has made it exponentially more powerful. Your network is no longer just a bunch of people who look and think the same. It's a global tapestry of perspectives. You'll have veterans who understand leadership under pressure, tech engineers who understand scalable systems, nonprofit leaders who understand social impact, and artists who understand creativity. This diversity is a strategic advantage. It means that no matter what problem you face in your career, There is almost certainly someone in your network who has seen it before and can help you navigate it. The bond isn't forged in a country club. It's forged in the trenches. It's forged at 2 a.m. in a library study room, desperately trying to finish a finance model. It's forged by surviving the brutal on-campus recruiting process together. It's a meritocracy of shared ambition. You all pass the same brutally difficult admissions process. You all survive the same core curriculum. This shared trial by fire creates a level of trust and camaraderie that you simply cannot replicate. So, when you look at the six-figure price tag of a top MBA, you're not just paying for 2 years of classes. You're paying an initiation fee. You are buying a lifetime membership to one of the most exclusive, supportive, and powerful professional organizations on the planet. An organization that will open doors, provide expertise, and accelerate your career for the next 40 years. The network is the ultimate safety net and the ultimate springboard all at once. But of course, a network is only as valuable as the people in it. And that raises a critical question. What exactly happens inside those hallowed halls that transforms a smart engineer like Maria or an aspiring founder like David? What are the actual tangible skills you learn that justify the investment and make you a valuable member of that network in the first place? It's not magic. It's a meticulously engineered process of transformation. Think of it as the construction of a new professional identity, built upon 3 foundational pillars: the toolkit, the framework, and the arena. Forget the ivy-covered walls and the mahogany boardrooms for a second. This is what you're actually paying for. Let's start with the toolkit. These are the hard skills, the quantitative languages of business that allow you to move from intuition to analysis. Let's go back to Maria, our brilliant engineer. Before her MBA, she could design a flawless circuit board. She could optimize code until it was a work of art. But if you asked her to read a balance sheet, her eyes would glaze over. To her, finance was a foreign language spoken by people in suits, a language designed to obscure, not to clarify. Her first corporate finance class was a brutal awakening. She was surrounded by former investment banking analysts who threw around terms like WACC, EBITDA, and discounted cash flow, as if they were ordering coffee. She felt like an imposter. But then something clicked. The professor wasn't just teaching formulas, he was teaching a new way to see. That net present value calculation wasn't just abstract math. It was a time machine. It allowed her to look at the massive investment required for her new chip design and translate its future potential into a single hard number today. It was the bridge between her engineering reality and the CEO's financial reality. Suddenly, accounting wasn't just about debits and credits. It was the story of a company's health, written in the universal language of money. Operations management wasn't about assembly lines. It was about identifying bottlenecks and optimizing flow in any system, whether it was a software development sprint or a hospital emergency room. Marketing analytics wasn't about catchy slogans. It was about regression models that could predict consumer behavior with terrifying accuracy. This is the first fundamental shift. An MBA gives you the toolkit to deconstruct any business problem into its core components and analyze them with quantitative rigor. You are no longer just the artist, you are also the art critic. You can walk into any room in any industry and understand the conversation. You learn the language of power, and that alone is a profound advantage. But a toolkit is useless without a blueprint. That's the second pillar. The framework. If the toolkit is the how, the framework is the why and the what next. This is where you zoom out from the individual trees of financial models and operational tactics to see the entire forest of competitive strategy. This is what transformed David, our aspiring founder. David had a great idea for a mobile app. He was passionate, driven, and had a small team of believers. But his entire strategy was essentially, build a great product and hope people come. In his strategy class, he was introduced to Michael Porter's 5 forces. It sounds academic, but for David it was a lightning bolt. He wasn't just competing with other apps. He was fighting against the bargaining power of his users, who could switch to a competitor for free. He was threatened by the low barriers to entry, meaning a new rival could pop up overnight. He had to consider the power of his suppliers, the app stores themselves, and the constant threat of substitute products, maybe even a new feature from a tech giant that could make his entire app obsolete. The framework didn't give him the answer. It gave him the right questions. It forced him to move beyond his own product-obsessed bubble and see the entire ecosystem he was operating in. He learned about blue ocean strategy, not just competing harder in the crowded red ocean of existing markets, but creating entirely new market space. He learned to analyze his own company not just by its product, but by its resources, its capabilities, and what made it truly inimitable. This is the leap from being a manager to being a leader. A manager optimizes the current system. A leader decides what the system should be. The frameworks you learn in an MBA are mental models that allow you to diagnose complex business situations, identify the point of maximum leverage, and chart a strategic path forward. You develop a kind of business intuition, but it's not a gut feeling. It's pattern recognition, honed by studying thousands of real-world business cases, successes, and failures. Which brings us to the third, and arguably the most important pillar, the arena. This is the element that no online course, no textbook, no YouTube video can ever replicate. It's the crucible where the toolkit and the framework are forged into actual skill. The case method classroom. Imagine this. You're not in a lecture hall. You're in a U-shaped amphitheater, a coliseum of intellect. Last night, you didn't just read a chapter. You spent 4 hours dissecting a 30-page case study about Nike's supply chain crisis in the 90s. You have all the real, messy, incomplete data the executives had at the time. Now the professor looks out at the 90 brilliant, sleep-deprived, and fiercely competitive people in the room and asks a simple question. So what should Phil Knight do? What follows is not a lecture. It's a 90-minute, high-stakes intellectual cage match. The former consultant from McKinsey sitting to your left argues for diversifying suppliers. The marketing director from a Fortune 500 on your right counters that it's a branding issue, not an operational one. Someone who actually worked in logistics raises their hand and systematically dismantles both of their arguments. The professor doesn't give answers. They poke, they prod, they challenge. What assumption are you making there? What data supports that conclusion? How would you defend that decision to the board? You have to think on your feet. You have to articulate your point of view with clarity and conviction. You have to persuade people who are just as smart as you, if not smarter. You have to listen to opposing views, find the flaws in your own logic, and adapt your position in real time. You learn when to fight for an idea and when to concede. You learn how to build a coalition around a shared conclusion. This is not a simulation. It is a live-fire exercise in decision-making under pressure. Day after day, case after case, you are forced to make executive-level decisions and defend them against the sharpest minds you've ever met. This is where the soft skills that executives get paid millions for are born. Leadership isn't a theory you read about. It's convincing a skeptical room to follow your plan. Communication isn't a PowerPoint slide. It's the ability to distill a complex argument into a single, compelling sentence while everyone is trying to talk over you. Influence is the currency of this arena. So when you ask what you learn, this is it. You get the toolkit of hard skills to analyze the problem. You get the frameworks of strategic thought to structure the solution. And you get the arena, a relentless training ground where you practice using that toolkit and those frameworks under immense pressure day in and day out. You don't just leave with knowledge, you leave with reflexes. The ability to diagnose, decide, and persuade becomes an instinct, hardwired into your professional DNA. You've been fundamentally rewired. But how does this rewiring actually translate into a career pivot? How do you go from being an engineer to a venture capitalist, or a nonprofit manager to a tech product leader? That's where the MBA career machine kicks into high gear. This machine isn't some abstract concept. It's a meticulously engineered system, a multi-stage rocket designed to launch you into a new career orbit. And it has 4 critical stages. The first and most visible is the structured recruiting pipeline. This is the superhighway that connects the campus directly to the world's most sought-after employers. Forget blindly submitting your resume into the black hole of a corporate website. At a top business school, the companies come to you. Think about the 3 most common, high-paying pivots: management consulting, investment banking, and big tech. Each has its own dedicated on-ramp built and maintained by the school. Let's start with consulting. Firms like McKinsey, Bain, and BCG don't just hope to find good candidates. They have a factory for it, and that factory is the MBA program. The entire first semester is practically a pre-training camp for consulting interviews. The case method, where you analyze hundreds of real-world business problems, is the exact muscle you need to flex in a case interview. But it goes deeper. Student-run consulting clubs, which are basically professional-grade training organizations, will put you through mock interview after mock interview. Second-year students who just spent their summer at these top firms will coach you relentlessly, for free, because it's part of the pay-it-forward culture. So when that on-campus interview day arrives, you're not just prepared. You're a finely tuned case-cracking machine. You've seen 100 variations of the problem they're about to give you. The companies know this. They rely on it. It de-risks their hiring process immensely. Then there's investment banking. This path is even more structured. A lockstep march from campus to Wall Street. The process starts almost the day you arrive. There are information sessions, networking nights, and Wall Street treks, where the school literally flies you to New York to meet with every major bank. The finance club will drill you on technical questions until you can build a discounted cash flow model in your sleep. Alumni who are now managing directors at Goldman Sachs or Morgan Stanley will come back to campus, not just to give a speech, but to actively scout talent and champion candidates from their alma mater. The interview process culminates in a super day, an intense back-to-back series of interviews. It's a gauntlet, but it's a known gauntlet. The school's career center gives you the map, the alumni give you the cheat codes, and the curriculum gives you the tools. You just have to walk the path. And what about tech? The pipeline is just as robust, but it looks a little different. Companies like Amazon, Google, and Microsoft have dedicated MBA recruiting teams. Amazon, in particular, is famous for hiring hundreds of MBAs every year into leadership development programs and product manager roles. The tech clubs at these schools are massive. They bring in product leaders to talk about their day-to-day. They host case competitions sponsored by these very companies, and they prep you for the unique product sense and behavioral interviews that are common in the industry. You're not just learning about tech, you're immersed in its culture and its recruiting ecosystem from week one. This structured pipeline is the engine of the career machine. But an engine needs a transmission to transfer that power into motion. That transmission is the second stage, the summer internship. The internship is the single most important part of the career pivot. It is the bridge between your old self and your new self. It's a 10 to 12-week, high-stakes audition. Think about it from the company's perspective. Hiring is risky. Hiring a career switcher is even riskier. How does a bank know that a former military captain can handle the grueling life of an analyst? How does a tech company know that a former art history major has what it takes to be a product manager? The internship is the answer. It's a low-risk trial run for them. And for you, it's a chance to test drive your new career before you buy it. You might have romanticized being a consultant, but can you handle the travel and the pressure? The internship lets you find out. More importantly, it gives you tangible, relevant experience to put on your resume. You go from being the engineer who wants to do marketing to the MBA candidate who spent a summer developing a go-to-market strategy for a Fortune 500 company. Your story is no longer hypothetical, it's proven. The ultimate goal of the internship, of course, is to convert it into a full-time offer. And at top programs, the conversion rates are incredibly high, often north of 70 or 80% for core industries. Securing that offer before your second year even begins is a game changer. It removes an immense amount of stress and allows you to use your final year to explore more niche interests, take on leadership roles, or even try to recruit for a dream job, knowing you have an amazing offer in your back pocket. Now, navigating these pipelines and landing that critical internship doesn't just happen by magic. That's where the third stage of the machine comes in, the Career Management Center, or CMC. It's easy to dismiss the CMC as just a place that polishes your resume, but that's like saying a Formula One pit crew just changes tires. The CMC is your strategic command center. They are your personal board of directors. Their job is to help you craft a compelling narrative. They ask the tough questions. Why do you want to make this switch? What skills from your past are relevant? How can you position your unique background as a strength, not a weakness? They help you translate, "I managed a platoon in Afghanistan," into, "I led a cross-functional team in a high-stakes, ambiguous environment to deliver results under extreme pressure." One is a fact, the other is a story that gets you hired. The CMC also manages the entire infrastructure of on-campus recruiting. They have decades-long relationships with recruiters at all the top firms. They know what these companies are looking for, and they provide invaluable intelligence. They run mock interviews with professional coaches, organize networking events, and provide a support system when the inevitable rejections come. They are the human element that keeps the machine running smoothly. So we have the structured pipeline, the internship bridge, and the career center navigators. But what about the jobs that aren't part of this formal machine? What if you want to work for a startup, a private equity firm, or move into a niche industry? That's where the fourth and perhaps most powerful stage of the machine kicks in, the alumni network. This is the off-road capability of your MBA. While on-campus recruiting is a superhighway, The alumni network is an infinite web of private roads that can get you anywhere. The reality of the job market is that the best jobs are often never publicly posted. They're filled through referrals. And there is no referral more powerful than one that comes from a fellow alum. Sending a cold email to a partner at a venture capital firm is a shot in the dark. But sending an email with the subject line, "Fellow Wharton alum question about VC," has a near 100% open rate. Why? Because there's an immediate, shared identity. That partner was once you. They sat in the same classrooms, stressed about the same exams, and relied on the alumni who came before them to get their own break. There is a deeply ingrained culture of paying it forward. You're not a stranger asking for a favor. You're a member of the family asking for advice. This network isn't just a list of names in a database. It's a living, breathing ecosystem. It's the second-year student who connects you to the intern manager at their old firm. It's the recent grad who walks your resume directly over to the hiring manager. It's the senior executive who creates a role for you because they were so impressed during an informational chat. This is the hidden power you're buying into. It's an access card that never expires. So when you look at the $200,000 price tag, you're not just paying for classes. You're paying for access to this 4-stage career-launching rocket. The structured pipelines, the internship-proving ground, the expert coaching of the Career Center, and the unparalleled access of the alumni network. Together, they form a system that dramatically de-risks the single biggest professional bet of your life. This machine is incredibly powerful, but it runs on a special kind of fuel, the power of the network and the prestige of the brand. And understanding how to leverage that fuel is the difference between a good outcome and a life-changing one. Let's be brutally honest about what this fuel really is. It's not about collecting 1,000 LinkedIn connections or going to a few wine and cheese mixers. Anyone can do that. The real fuel, the high-octane stuff, is built on 2 pillars that are almost impossible to replicate outside of these elite institutions: curated community and irrational prestige. First, let's talk about the network, but not in the way you think. The common view of an MBA network is transactional. I'll help you if you help me. That's a tiny, insignificant part of the equation. The real power is in the shared experience. You are thrown into a 2-year pressure cooker with hundreds of the most ambitious, intelligent, and diverse people you will ever meet. You work on projects until 3 in the morning, you argue in class, you travel the world together, you see each other at your best and, more importantly, at your worst. This forges a bond that is less like a professional connection and more like a tribal affiliation. These people become your strong ties. They are the people you can call at midnight when your startup is failing, and they will actually pick up the phone. But here's the secret that most applicants miss. The true, explosive power of the network doesn't even come from your classmates. It comes from what sociologists call the strength of weak ties. Your classmates, your strong ties, are incredible, but they mostly know what you know. They run in similar circles. The life-changing opportunities, the ones you could never have predicted, come from the periphery. They come from your classmate's former boss, or their roommate from undergrad, or their cousin who works in a completely different industry. This is the second-degree network, the weak ties, and a top MBA program doesn't just give you 500 new friends, it gives you access to 250,000 of these game-changing weak ties. Let me give you a real example. A friend of mine, let's call him Alex, graduated from a top 5 program. He wanted to pivot from finance into the hyper-niche world of sustainable aquaculture technology. He knew nothing. He knew no one. He sent out 100 cold emails and got 0 replies. He was about to give up. Then, he mentioned it in his alumni WhatsApp group. A classmate he hadn't spoken to in 2 years replied, "Hey, that's random. My sister's husband is the head of strategy at one of the biggest sustainable fish farms in Norway. Want an intro?" 2 weeks later, Alex was on a plane to Oslo. 6 weeks later, he had a job offer to lead their US expansion. That is the power of the network. It's not a database you search. It's a living ecosystem of trust that you activate. That introduction didn't come with a resume attached. It came with the implicit endorsement. He's one of us. He's smart. He's trustworthy. You should talk to him. That's a signal that no amount of cold emailing can ever replicate. It's a trust premium that is baked into the very fabric of the degree. This brings us to the second pillar, the brand, the prestige. People get squeamish talking about this because it feels elitist. And it is. But ignoring it is like ignoring gravity. The brand of a Harvard, a Stanford, or a Wharton is one of the most powerful psychological forces in the business world. It's a cognitive shortcut. When a hiring manager, a venture capitalist, or a potential client sees that name on your resume, it triggers a cascade of positive assumptions. This is the halo effect in action. They don't know you, but they subconsciously assume you are intelligent, hardworking, quantitatively skilled, and have excellent communication abilities. You haven't said a word, and you're already 90% of the way to being considered credible. Is this fair? Absolutely not. Is it powerful? Immensely. The brand doesn't get you the job, but it gets you the interview. It doesn't get you the funding, but it gets you the meeting. It opens doors that are triple bolted for everyone else. Think about the most competitive industries: private equity, venture capital, hedge funds. Their applicant pools are gargantuan. They receive thousands of resumes for a single analyst position. They use the MBA brand as a primary, brutal, and efficient filter. If you're not from one of their 5 or 6 target schools, your resume might not even be opened by a human being. The brand is your ticket past the velvet rope. It gets you into the room where the decisions are actually made. And this asset, the brand, has an incredibly long half-life. Its value doesn't just last for your first job search. It compounds over your entire career. 10 years out, when you're starting your own company and trying to raise a seed round, the fact that you and a potential investor both went to Columbia Business School creates an instant, unstated bond. It bridges the gap of trust. 20 years out, when you're being considered for a public company board seat, that credential on your bio still signals a level of rigor and vetting that sets you apart. It's a permanent reputational asset. Now, here's where it gets really interesting. The network and the brand are not separate. They are locked in a powerful, self-reinforcing loop. The immense prestige of the brand attracts the highest caliber students and faculty from around the globe. These incredible people then go on to achieve amazing things, forming a powerful, influential network. The success of that alumni network, in turn, burnishes the brand, making it even more prestigious. This virtuous cycle has been spinning for over a century at these institutions. It's what creates the deep, unshakable value that persists through economic cycles, technological disruptions, and even pandemics. So why is this more important in 2026 than ever before? Because we are entering an era of unprecedented uncertainty. Artificial intelligence can automate technical skills. Remote work is making the job market flatter and more competitive. The specific knowledge you learn in any classroom today could be obsolete in 5 years. In that kind of environment, what becomes your most durable career asset? It's not the specific valuation model you learned. It's the human capital. It's the quality of your judgment, your ability to lead, and the power of your network. AI can write a marketing plan, but it can't call up a classmate who is now the CMO at a Fortune 500 company to get real-world feedback. A remote work platform can connect you to talent in another country, but it can't provide the implicit trust of working with someone who survived the same brutal core curriculum you did. The fuel of network and brand isn't just a nice-to-have anymore. In the volatile landscape of the late 2020s, it's the ultimate career insurance policy. It's the foundation upon which a resilient, adaptable, and impactful career is built. So you have this incredibly potent fuel. You've been admitted, you've paid the tuition, and you're on campus. But just having a full tank of gas does you no good if you don't know how to start the engine. You need to know how to ignite it. And that ignition happens through a process that from the outside looks like magic, but from the inside is a highly engineered, ruthlessly efficient machine. I'm talking about the on-campus recruiting ecosystem and the hidden job market it unlocks. This ecosystem is the single most misunderstood and arguably most valuable part of the entire MBA equation. For the vast majority of high-paying, career-switching roles in fields like management consulting, investment banking, and brand management at Fortune 500 companies, the front door isn't LinkedIn. It's not Indeed. It's not a headhunter. The front door is a conference room in the business school building, and the only people with a key are the students. This is the hidden job market in its purest form. These companies have decided that the most efficient way to find their next generation of leaders is to go directly to a handful of elite schools and almost exclusively recruit from that pre-selected talent pool. It's a fire hose of opportunity aimed directly at you, while everyone else on the outside is trying to catch rain in a thimble. Let's make this real. Imagine you're a first-year MBA student named Sarah. It's October. Your classes are demanding, but the real work is happening outside the classroom. On Monday, you attend a corporate presentation by McKinsey & Company. It's not some generic PowerPoint. It's led by a partner, a graduate of your very school, who walks you through a real client case and then stays for an hour to answer questions. After the presentation, there's a networking reception. You're not just shaking hands, you're having structured conversations with consultants who are actively evaluating you. Not just for your resume, but for your presence, your curiosity, your ability to connect. On Tuesday, you have 3 back-to-back coffee chats. These are 20-minute, one-on-one informational interviews with associates from Goldman Sachs, Morgan Stanley, and a boutique private equity firm. These aren't cold calls you begged for on LinkedIn. They were scheduled through a dedicated school portal. The school's Career Management Center has already prepped you on what questions to ask, how to tell your story, and what each firm is looking for. You walk into each conversation prepared and confident. On Wednesday, Amazon Web Services is hosting a case workshop on campus, teaching students the exact framework they use for their famous product management interviews. On Thursday, there's a Women in Finance dinner sponsored by JP Morgan. On Friday, applications for summer internships are due through the school's internal job board. Not a public board, an internal one. The resume you submit has been torn apart and rebuilt 5 times with a dedicated career coach who specializes in investment banking resumes. Your cover letter was reviewed by a second-year student who interned at the very bank you're applying to. This isn't a job search. This is a full-contact sport. It's an orchestrated, high-stakes, and incredibly efficient matchmaking process. The Career Management Center acts as your agent, your coach, and your logistics manager. They're not just proofreading your resume. They are managing the corporate relationships that make this entire system possible. They spend the year traveling, meeting with recruiters, and selling the talent pool of the school. Selling you to the world's top companies. They enforce the rules of engagement, ensuring companies don't extend offers too early or put undue pressure on students. They are the puppet masters of this entire intricate dance. And then there's the second, even more powerful army fighting on your behalf. The alumni. When you're a student at a top MBA program, you don't just get a list of alumni contacts. You get an active network of advocates. Second-year students who just finished their internships are your primary source of intel. They run mock interviews, they share the interview questions they were asked, they tell you which partners to talk to and which ones to avoid. They are your older brothers and sisters in this process, and their success is tied to yours because the strength of the school's brand depends on it. When you reach out to an alumnus who graduated 5 or 10 years ago, you're not a stranger. You are a fellow member of the tribe. They will take your call. They will give you the unvarnished truth about their industry. And when the time comes, they will walk your resume down the hall and place it on the hiring manager's desk. This is the warm introduction at scale. Now, contrast Sarah's experience with the typical job search for a high-level position from the outside. You spend hours tailoring your resume and cover letter for a job on a public website. You submit it through an applicant tracking system, a piece of software designed to screen you out based on keywords. If you're lucky, your resume is seen by a human for about 6 seconds. Weeks go by. Maybe you get a rejection email. More often, you get nothing. Silence. You try to network on LinkedIn, sending messages into the void, hoping for a response. It is a lonely, inefficient, and often demoralizing process. You are one of 100,000. In the on-campus recruiting process, you are one of 100. I know a guy, let's call him David. Before his MBA, David was a sharp engineer at a good, but not famous tech company. For 2 years, he tried to break into strategy consulting. He applied to Bain, BCG, McKinsey, all of them. He was smart, he prepped for the case interviews, but he couldn't even get a first-round interview. His resume, coming from a non-target school and a non-feeder company, was screened out every single time. He was invisible to them. David then went to a top 10 MBA program. He followed the exact process I just described. The corporate presentations, the coffee chats, the case prep with second years, the coaching from the Career Center. 1 year later, he was holding 3 summer internship offers. 1 from Bain, 1 from BCG, and 1 from McKinsey. The very firms that wouldn't even grant him a phone screen just 18 months earlier were now actively competing to hire him. What changed? Was David suddenly smarter? No, he was the same person. What changed was his platform. He was now a known commodity from a trusted supplier. The MBA program was his stamp of approval. It de-risked the hiring decision for those firms. And that's the final piece of the puzzle. Why do companies invest millions of dollars into this system? Because it's the most efficient and effective way for them to hire elite, multi-talented athletes for the corporate world. They know that to get into a top MBA program, a candidate has already been vetted for intelligence, ambition, leadership potential, and interpersonal skills. The business school has done the first, most expensive round of screening for them. By showing up on campus, they get a concentrated, curated pool of candidates who have been trained not just in finance and marketing, but in the soft skills of communication and teamwork, and most importantly, have been trained on how to master their specific, grueling interview process. It's a guaranteed pipeline of talent. This entire machine, the career center, the corporate relationships, the alumni network, the structured recruiting calendar, is designed for one purpose: to take your ambition, your past experience, and the school's brand and convert it into a high-paying, career-accelerating job. It's a system built to generate a very specific and very powerful return on your investment. And the exact figures behind that return, the raw numbers that power this entire engine, are even more compelling than the process itself. So let's talk numbers. Let's get brutally honest about the dollars and cents, because at the end of the day, an investment is measured by its return. And the financial return of a top US MBA isn't just good, it's life-altering. For the graduating class of 2023 at top-tier schools, the median base salary hovered around $190,000. That's the starting point. Now, add a median signing bonus of another $35,000 to $40,000. So, right out of the gate, we're talking about a first-year cash compensation package of nearly $250,000 for a 29-year-old. Let's put that in perspective. The typical high-achieving candidate entering these programs might be earning, let's say, $95,000 a year. They are already successful, already on a good track. But in the span of just 24 months, the time it takes to complete the degree, they have more than doubled their annual earning power. Find me another legal, repeatable, and predictable system on planet Earth that can deliver that kind of return on human capital. It's not just a step up. It's a quantum leap into a different financial stratosphere. Now, I can already hear the skeptics, and they have a valid point. That's great, they'll say. But what about the cost? What about the crippling debt? And they're right to ask. This isn't a free lunch. The all-in cost of a top MBA, factoring in tuition, fees, health insurance, and the astronomical cost of living in places like Boston, Palo Alto, or New York City, can easily eclipse $250,000. That's before we even account for the opportunity cost, the nearly $200,000 in salary you didn't earn while you were in class. So we're looking at a total investment that can feel like $500,000. It's a terrifying number. It's a number that keeps people up at night. But this is where the investment mindset becomes critical. You're not spending that money. You are deploying it. Let's run a simple break-even analysis. Using our previous example, your salary jumped from $95,000 to a starting package of, let's call it $230,000. That's an increase of $135,000 per year. Now, of course, there are taxes and your lifestyle might inflate a bit. But even if we're conservative and say you can put just 60% of that increase toward your investment, that's over $80,000 a year dedicated to paying it back. Suddenly, that daunting $250,000 loan is gone in about 3 years. 3 years. By the time you're 32, you are debt-free from the MBA and operating on a completely new financial baseline for the next 30-plus years of your career. The initial cost, while massive, is a short-term hurdle for a long-term, permanent upgrade to your earning potential. But here's the secret that graduates know. The first job salary, as impressive as it is the least important number. It's just the entry fee to a much bigger game. The real, mind-boggling return on investment comes from the change in your career trajectory. Let's imagine two people, both smart, both ambitious. Let's call them Alex and Sarah. Both start their careers at 24, making $80,000 a year in a corporate role. Alex decides against the MBA. He works hard, gets promoted, and does very well. By age 34, after a decade of solid work, Alex is a senior manager, earning a fantastic salary of $190,000. He's a success story by any measure. Now let's look at Sarah. At age 27, making $100,000, she hits pause. She goes to a top 15 MBA program. She graduates at 29 and takes a consulting job with a total first-year compensation of $240,000. Right away, she has leapfrogged Alex's tenure progression in just 2 years. But it's what happens next that matters. The consulting firm has a strict, up-or-out promotion cycle designed around post-MBAs. 2 years in, she's a project leader making over $300,000. 2 years after that, she's a principal pushing $450,000. By age 36, she makes partner, and her compensation is now a complex mix of salary and profit sharing that easily clears 7 figures. At the same age, Alex is a director making $250,000. Again, a great career. But Sarah isn't just on a different rung of the ladder. She's on a different ladder entirely. The MBA wasn't a boost, it was a portal. Over their lifetimes, the difference in their earnings won't be a few $100,000. It will be millions, potentially tens of millions. That is the raw, brutal, and often unspoken power of the MBA's financial ROI. It doesn't just change your salary, it changes your entire economic destiny. And this isn't just a story about consulting or Wall Street anymore. That's the 2006 narrative. In 2026, the paths to this kind of accelerated return are more diverse than ever. Look at the tech industry. The most coveted post-MBA role is now product manager at a company like Google, Amazon, or a fast-growing startup. These roles are mini-sets of a product, requiring a blend of technical, strategic, and leadership skills. The exact trifecta an MBA is designed to build. And the compensation reflects that. A starting base salary of $175,000 is common, but the real prize is the equity. The restricted stock units, or RSUs, can add another $70,000 to $100,000 per year, and that's just to start. As you get promoted, your equity grants grow exponentially. This is how you see 35-year-old directors of product at tech companies with a net worth in the millions. Their salary is just their walking around money. Their wealth is being built through the ownership stake the MBA helped them secure. Then there's the path of entrepreneurship. For this group, the ROI isn't measured in a salary at all. It's measured in equity. An MBA program acts as an incubator. It gives you 2 years to develop an idea, find a co-founder from a talent pool of the world's most driven people, and build a business plan with feedback from professors who are also venture capitalists. The school's brand name alone opens doors for funding that would be welded shut for anyone else. The ROI here might be zero for 3 years, and then it might be $50 million when your company is acquired. It's a different risk profile, but the MBA is the ultimate risk mitigation tool, providing the network, the knowledge, and the credibility to turn a dream into a viable enterprise. So when we talk about the return, we're not talking about a single number. We're talking about a portfolio of options. The MBA gives you a key that unlocks doors to consulting, high finance, big tech, and venture-backed startups. You get to choose which door to open based on your own appetite for risk and reward. But behind every single one of those doors is a career trajectory that is fundamentally faster, steeper, and higher than the one available before. But these numbers, as staggering as they are just a symptom. They are the result of a fundamental transformation that occurs over those 2 years, a change in how you think, how you operate, and most importantly, who you know. The financial return is the hook, the quantifiable proof that gets people to sign the tuition check. But the real life-altering value lies in the assets you can't list on a spreadsheet. It's the bulletproof network, the C-suite mindset, and the keys to rooms you didn't even know existed. And understanding that final piece of the puzzle is what separates those who simply get an MBA from those who truly leverage it for a lifetime. So, what does that leverage actually look like? It's the difference between being given a toolbox and becoming a master craftsman. Anyone can hold a hammer, but the craftsman knows precisely where, when, and how hard to strike to build something that lasts. The MBA, when properly leveraged, isn't the toolbox. It's the 2 years you spend in the master's workshop, learning the craft of value creation, influence, and strategic leadership. It's where you learn not just to read the blueprints of a company, but to draw them yourself. Think about it this way. In your day-to-day job, you become an expert in a single instrument. You might be a virtuoso on the violin of marketing, or the cello of finance, or the percussion of logistics. You play your part beautifully, but the MBA hands you the conductor's baton. Suddenly, you're not just playing your note, you're hearing the entire orchestra. You understand how the string section needs to swell to support the brass, how the woodwinds and percussion must sync for the crescendo. You start to see the entire symphony of business. This is the C-suite mindset. It's the ability to zoom out from the single spreadsheet or marketing campaign and see the whole interconnected system. And in a world of increasing complexity, the people who can conduct the orchestra are the ones who become indispensable. Let's tackle the biggest ghost in the room one last time. The cost. The 6-figure price tag and the 2 years of lost income. It's a mountain, no doubt. But the people who successfully leverage their MBA don't see it as a cost. They see it as the single largest investment they will ever make in their own personal stock. You invest in the S&P 500, you invest in real estate, but when was the last time you made a calculated high-conviction bet on your own potential? This isn't spending money. It's deploying capital into the highest growth asset you will ever control. You. It's a declaration that you believe your future self is capable of generating returns that will dwarf the initial investment. And the data year after year overwhelmingly proves that for those who commit, this bet pays off in ways that a stock portfolio never could. Now let's bring it home to 2026. Why is this specific moment in time so critical? Because we are standing on the precipice of the most profound economic and technological shift since the Industrial Revolution. Artificial intelligence, biotech, decentralized finance, the green energy transition. These aren't just new industries. They are tectonic plates rearranging the very ground beneath our feet. In this new world, deep, narrow expertise is fragile. The coding language you're an expert in today could be obsolete in 5 years. The marketing platform you've mastered could be replaced by an AI tomorrow. So what is the ultimate career insurance in an age of unprecedented change? It's the ability to learn, adapt, and lead through the disruption. The US MBA is uniquely positioned as the crucible for this kind of leadership. It's where engineers learn to speak the language of finance, where marketing managers learn the fundamentals of supply chain, and where doctors learn how to build a business case for a new medical device. It teaches you to be a translator, a systems thinker, a person who can stand at the chaotic intersection of technology, human capital, and market dynamics and see a clear path forward. While others are being automated, you'll be the one directing the automation. While others are confused by the change, you'll be the one harnessing it. The MBA in 2026 isn't about getting a safe job. It's about learning how to thrive in a world where no job is safe. I once knew a software engineer, brilliant coder, but she was stuck. She was a doer, handed projects and executing them flawlessly, but she had no say in what was being built or why. She felt like a cog. She took the plunge, went to a top 15 business school, and it almost broke her. She was surrounded by people from finance and consulting who spoke a language she didn't understand. But she learned. She learned how to build a financial model, how to dissect a market, how to pitch an idea, how to persuade a room full of skeptics. 2 years later, she didn't just go back to tech. She joined a different company as a product manager, leading a team of engineers just like her former self. A year after that, she pitched a new product line. An idea she'd had for years but never knew how to articulate in the language of business. The company funded it. Today, that product is the fastest growing segment of their business, and she's on the executive track. The MBA didn't teach her how to code better. It taught her how to turn her code into value, her idea into a business, and herself into a leader. That is the leverage we're talking about. This transformation is the secret, intangible ROI that doesn't show up on any salary report. It's the quiet confidence you gain from surviving a program designed to push you to your absolute limit. It's the resilience you build when you're forced to defend a business case you've worked on for 100 hours, only to have it politely but systematically dismantled by a world-class professor and 80 hyper-intelligent classmates. It's the humility you learn when you realize that the person sitting next to you, who you initially dismissed, is a former Navy SEAL who knows more about leading under pressure than you could learn in 1,000 lifetimes. You don't just graduate with a diploma. You graduate with a new mental operating system. You process information differently. You deconstruct problems with a rigor you didn't know you possessed. You build relationships with an intentionality that opens doors. You walk into any room, any negotiation, any crisis, and you have a framework. You have a network. You have a deep, unshakable belief in your ability to figure it out. So as we look to 2026 and beyond, the question isn't whether a US MBA is still a good investment. The evidence is overwhelming. The true question is it the right investment for you? It's not a magic ticket. It's a powerful amplifier. It will take every ounce of ambition, talent, and drive you have and multiply it. If you're looking for a passive credential, save your money. But if you are ready to be challenged, to be broken down and rebuilt into a more effective, more resilient, and more visionary version of yourself, then it remains one of the most powerful launchpads for a life of impact and consequence. The world is changing faster than ever. The challenges are bigger than ever. And the demand for people who can build, lead, and solve complex problems has never been greater. The degree hanging on the wall is just a piece of paper. The network, the mindset, the sheer transformative power of the experience, that is the real asset. And in 2026, that asset won't just be valuable. It will be essential. The diploma isn't the finish line. It's the starting gun.